Hello, it's Robert Miner with Dynamic Traders Group with this week's DT Trade Strategies video for the week beginning October 4th, where we do a short video for our Twitter and YouTube followers to give you a taste of what we do for our subscribers of our DT reports. And we'll look at a couple of markets that have potential trade setups in the week ahead. Remember, I say potential trade setups because our whole objective is not to forecast the future. It's to identify conditions with a high probability outcome that we can take advantage of with acceptable capital exposure. So first we're going to look at a couple markets we looked at last week. Let's take a look at those, and then I think there's a real trade opportunity coming up also in the next few days. Keep in mind that the whole purpose of the DT reports is not just to be an analytical report and a trade strategy and a trade setup report, but it's meant to be educational, just like these videos, so that what you learn here about trade strategies, trade setups, that sort of thing, trade management, you can apply to whatever markets that you trade and whatever time frames you trade, whether it's the markets we talk about or not. Okay, let's get started and look at the couple markets we looked at last week. This is the XPX close only daily data, and this is the chart we looked at last week, and I'll put the cursor or our vertical line across here right here on last Friday. So to the left is what we were looking at last week, and what we're looking at is a potential trade setup on the short side if the SPX made a momentum bear reversal without having closed above the September 15th closing high, that little swing low closing high. Because if it made that a bear reversal without exceeding that high, without closing above that high, it would be a setup to continue the decline, probably to a new low, because the weekly momentums, the weekly cycles, were also bearish. So we call that a dual time frame momentum bearish setup to continue the higher time frame bearish trend. Well, that's exactly what happened last week. Actually, on Tuesday, it made the bear reversal. So we're looking at close only data. The question is, was that a trade setup that was acceptable capital exposure for you to take? Well, let me put their daily data on, the daily range data. So here I got my cursor on Monday, or excuse me, that is Friday. That was the day that video was done last week. You can take a listen to it. And then here's Monday. Monday was a little narrow range inside day. Inside days are days of indecision. So which way is it going to break out from that inside day? Well, given that the daily momentums had reached overbought, at least on the 8, more than likely it was going to break down. More than likely we're going to make that bear reversal without having closed above 44.8070, and that's exactly what we did the next day on Tuesday. But let's take a look at that day. On the SPX cash data, that was a gap open on the downside, and then it went straight down the toilet. So yes, that was a great setup on the short side. The question is, could you have taken advantage of that information for a short trade if you're a reasonably short-term trader, like you look at trades that last 2 or 3 or 4 days, which are a lot of the types of trades we look at in a report. We look at daily trends and then we look at weekly trends. So the question is, could you take advantage of that information? Well, probably not. Big gap open on the downside, just crashed throughout the day. So our stop would have to be above at least the prior day's high if we went short for a potential of a 3 to 4 day decline, probably to a new low. But that's still a pretty big stop to have, at least on futures and leverage trades. Now, if you trade ETFs short term, some of the leveraged ETFs, you could have your fairly low position size and take advantage of that with acceptable capital exposure. So everything's about capital exposure and position size, because that determines how much risk you're going to have. So I'd like to say that, boy, that was a beautiful call. It was. Not necessarily one that you could take an advantage of for the short term anyway. So this is Gbtc daily data. That's an ETF that follows Bitcoin. We use that for specific Bitcoin recommendations. As you'll remember from last week's video, I'll put the cursor right here. That was last Friday's data. So the Saturday video anticipated that Bitcoin was going to roll over to the downside and make a new low. Well, that's exactly what Gbtc did early in the week last week. However, that's not what Bitcoin did. Bitcoin just went sideways for those 2 to 3 days where the Gbtc went to a new low. Well, let's take a look. Every day, of course, we update our trade strategies for each of the markets we follow. And on Thursday recommended, because the daily momentum had made a bull reversal without reaching the oversold zone. That's pretty positive. On Thursday, recommended on the second half of the short trade. The first half was exited a few days earlier, the prior week, at I think it was around a 17% gain. But the second unit, or the second half of the position, recommended exiting either on a higher close, that would be a close above Thursday's close, or on a buy stop, protective buy stop, a tick above the high of that day, of Thursday. Well, of course, what happened the next day as far as Gbtc? Well, it was a huge gap open, really big gap open on that day, which of course exited on the protective buy stop, which was above this high. And how'd the trade end up? Well, that second unit was basically break even. It was a small profit of way less than 1%, but let's just call it break even from the short that was taken back around this period of time. So the first half of the unit was a substantial profit. The second half was a break even. And we can't foresee these kind of gap up moves. And so that's why you have to have the trade management to adjust your stops when you get in a position to make a reversal and adjust them in a logical place. If the market gaps against you, it gaps against you. It happens. And that's also why we do 2-unit trading, is we exit 1 unit of the trade, usually half the position, when we reach a position to where we're making probably in this case, a daily reversal. So it was right around this period of time that we exited the first half of the position, and then the second half, well, we gapped above it for a break even. So on the entire position, it was a pretty good profit, and we protected ourselves at least from the loss on the second half. So trading strategies are really, really important. It's really the key to longer term success. Trade strategies and multiple unit trading. Okay, let's take a look at what I think is going to be a real opportunity in the days ahead. We're going to take a bit of a detailed look on gold and a potential trade setup in the days to come. But before we start that, every few months I do what I call a big picture report for our DT Report subscribers. I'm going to be updating the intermediate to longer term probable trends, at least, and potential reversals for all the major markets that we look at beginning this Monday. This Monday's big picture report will be on the euro, dollar, Bitcoin, and Ethereum. And that's going to update the larger time frame picture and the major trend picture that I believe where those markets are at this point in time, and the opportunities in the weeks and months ahead. So if you're interested in those, check out our DT reports at dynamictraders.com. The next week I'll be doing stock indexes, and we'll also be doing the precious metals over the next 3 weeks. We're going to update all of the long-term positions of all of the markets. So it'd be a good time if you're interested in these financial markets to check out our DT reports. Okay, here's gold weekly data. It's just the week ending data. So nothing's really changed in the last few weeks. It's more than likely gold's been making a correction here. This is a probable ABCDE correction. And it's the second most common correction after the ABC corrections. So the important information here is, one, the 8 weekly momentum reached oversold this past week. And that's at least a wake-up call. We're very near a weekly low. Keep in mind there's no magic about momentum indicators. And they're really misnamed as momentum indicators. They're really rate of change indicators. Whatever one you use, they all tell you about the same thing. But the beauty of them is they tend to cycle nicely. If you use an indicator that you're familiar with and it's relatively smooth from oversold to overbought, momentum cycles are really more regular than price cycles. Okay, we're in a position pretty close to make a weekly low in gold. Here's gold daily. Again, it's just the close only data. And the beauty is this past week we have potentially completed almost an ideal 5-wave decline. That's would be typical for the wave E. Still got a question mark. We don't know if it's complete, but the daily momentum's made, they're now dual look-back bullish, which is significant particularly when the weekly momentum is oversold. The weekly cycle's oversold. We closed above the September 27th high last Thursday. That's the initial signal that we've completed this wavy decline. We have to close above 1778.80. If we do that, that will be a strong signal that a weekly reversal is being made, a weekly bull reversal. And the reason that that's significant, or could be significant, I should say, is gold is in a position to have completed a major correction here. So that's why we want to be particularly alert in the days ahead. So we'll follow this up every day in our DT reports as well. May have a great setup. We're probably several days away until we make the next rotation, the next cycle, and the daily momentum, and the next bull reversal. If when that's made, as long as we haven't closed below the September 29th close, that's going to be a fantastic setup on the long side. So I just wanted you to be alert to this, be alert that we're real close to making a weekly low, which could be a multi-month low. So we'll keep on top of that. I hope you'll subscribe to our DT reports. Check us out every day. We have updates every day with our DT reports. It's educational as well as alerting you to specific trade setups. That's it for today. Robert Miner over and out. Take care. Stay healthy.